Nio Stock. CATHIE Wood and Mark Cuban reveal how Nio Stock will hit $500 soon. What? Is this true? Apple getting ready to reveal its electric automobile? Well, as far as we know, it will be the most expensive. Just kidding. Well, Nio, a Chinese electric vehicle maker, announced its fourth quarter results on March 25th. Despite mixed outcomes, investors were mostly concerned about lower than expected delivery projections. Nio shares plunged by 9% after the market closed that day. Hello everyone, and welcome back to Stock Market News. Today, we'll talk about what CATHIE Wood and Mark Cuban have to say about Nio Stock. So go ahead and watch the full video because you'll get your daily dose of Nio Stock right here. Nio Stock has faced several problems, ranging from supply chain disruptions to regulatory risk. However, there are various grounds to assume that shares are still inexpensive. Here's why Nio's future seems promising. CATHIE Wood, the founder, CEO, and Chief Investment Officer of ARK Investment Management LLC, has established herself as a stock picker and thought leader in the field of disruptive technology. CATHIE is one of the investors who briefed about purchasing the shares of Tesla, and we all know where Tesla is now. And on the other hand, Mark Cuban is a multi-millionaire investor who sold Broadcast.com to Yahoo in 1999 for $5.7 billion. Cuban founded the business 2 years before selling it, establishing him as a Wall Street legend. Since then, Cuban has invested in several companies, mainly mission-driven startups, and owns the Dallas Mavericks. The Nio stock has faced several hurdles, ranging from supply chain disruptions to regulatory risk. However, there are various reasons to believe that equities are inexpensive. Here are some of the reasons why Nio's future is bright. CATHIE Wood's companies, according to previously revealed ARK Invest trading data, the ARK Autonomous Tech and Robotics ETF, code ARKQ, purchased 420,057 shares of Nio on March 25th, valued at about $8.4 million, or 0.5% of the ETF's entire holdings. This was the first time Wood's ETF purchased Nio, and ARK has not documented any fresh trades in Nio shares since then. Wood purchased Xpeng late last year as the share price of Chinese firms began to decline. ARKQ now owns 928,648 shares of Xpeng, worth approximately $27 million, or 1.65% of the company. Wood is keeping a very keen eye on the innovative Chinese market and also quoted the portfolio manager expects the next few years to bring the most spectacular period for innovation that we have ever seen. Furthermore, Nio reported an almost 50% year-over-year increase in automotive sales, with a 6.7% increase over the previous quarter. Nio CEO William Li said that 2021 will be a year of significant expenditures in technology and supply chain innovation. Li plans to relaunch Nio in 2022 by expanding its user base and offering its products and services in new countries. Finally, CFO Wei Feng revealed that Nio obtained a margin of 20.1% per vehicle in 2021. As a consequence, the firm performed well last year. Chung feels that the maintained confidence in Nio shares is justifiable given the Q4 margins. It was believed to be more powerful than expected. Furthermore, the 3.1% quarter-over-quarter decrease in overall gross margins can be attributed to the Q4 extremely high base due to income from new EV credit. B.O. Pai, a security analyst at U.S. Tiger, believes that $40 is a reasonable price for new shares. The analyst expects net income to cover selling, general, and administrative costs in 2022, assuming an 18% ratio based on the expansion of Nio operations into new European nations and further penetration into the Chinese market. Nio and the other rivals should be bawling in their drink right now, since Tesla merely slashed their parking revenues. Owners of Nio inventory do not want to spend more to promote their shares in the Chinese language electric vehicle, which is down 45% this year to 2022. To be honest, I'm intrigued by the prospectus for an even global EV. Nonetheless, CEO William Lee's recent announcement that it is in the research stage of building a phone to compete with Apple has aroused fears that it would lose sight. The CEO is depicted in a visual release at the end of March that explains why the firm is considering producing a phone. They appear to desire a phone that works better with their cars. On the surface, I get the argument, but the more I think about it, the more it reminds me of a failed model extension. Consider Samsonite luggage or the Zippo fragrance. All of this chatter about Nio making a phone has me wondering if the model extension is insane. Nio phone or Apple automobile? Shouldn't an eagle's eye or collaboration with Apple be utilized to tackle problems? I'd never blogged in a Nio car before. Most people, I suppose, have not done both, so I'm not sure if this is a real concern. Lee appears to envision it, according to the CNEV Post study. We will learn more from the attitude of providing better expertise to our customers, the Nio head remarked over the phone, according to CNEV Post. According to Lee, Apple's operating system is a closed environment. This suggests that Apple owns all the iPhone software and hardware. Google has a free and open environment. After all, its Android operating system is available for free download by anybody on any phone other than an iPhone. So if Apple were so interested, Lee might approach them and collaborate with their engineers to figure out how to provide greater in-car personal expertise without constructing a phone from the ground up. Apple isn't interested, and it's not only because it's working on the Apple automobile. The Apple ecosystem is a more effective retention strategy. I know this is the case since my family has 2 Apple computers, 2 iPhones, 1 Apple TV, 1 set of AirPods, and 1 iPad. Collectively, they all function well. When it comes to Android and home Windows, things are a little different. Lee is concerned that if Apple does not release its Apple automobile by 2025, many Nio owners, he estimates 60% of those who use iPhones, will be enticed to trade their Nios for the Apple automobile and its ecosystem. I find it useful to believe that anyone in their right mind would let a $1,000 product decide the type of EV they purchase, yet illogical decisions like this occur more frequently than we realize. So the Nio telephone isn't as crazy as one may think. However, as Lee points out, it is easier to supply a phone. Making a good one is far more durable. However, it implies keeping most of its automobiles purchasing extra Nio automobiles. The swap might be worthwhile. Why does Apple desire an automotive for its personnel? In February 2021, I requested this exact inquiry, and a technical call was missed. Jason Adden reasoned that, in the same way that it got into the phone business before it understood anything about building phones, it should do the same with automobile phones. Few products are more susceptible to disruption than the automobile. Tesla has done this to some extent, but right now, the circumstances are close to ideal for someone to come back and define what happens next for the automobile, Ayton stated. Even Tesla represents a gradual adjustment to the auto in the way that the Palm is used. It was a minor modification to the mobile phone. It took something you already knew and added to it or changed it slightly, but it wasn't a completely new thing like the iPhone. Consider that the Apple automobile will most certainly sell for 60 times the price of an iPhone. Even with lower margins, the money earned might be astonishing if only 1% of the iPhone owners purchased one. The Word said that there were over 1 billion active iPhones globally in 2021. One PC is worth $10 million. Multiply that by $60,000 and you get $600 billion in income. Even if you spread these cross sales out over 10 years, that's a significant $60 billion, or 16% of its $378 billion in trailing 12-month revenues. That offers a compelling financial case for 15 years of progress already recorded. That's it for today's video. Please keep in mind that this channel is not designed to give financial advice, and we do not encourage you to invest in any firm. This is the method via which instructional content is brought to your door. With that in mind, before you buy anything, we recommend that you conduct an extensive study on the subject. Thank you for watching the video. Please like and subscribe to the channel for the most recent updates, and until then, we'll see you soon.